So at this point, we go into our next conversation. And of course, we have our guest on board. Now, let me just start by saying that foreign investors are being forced to sell down their holdings into more South African incorporated blue chips following the announcement last week by index provider MSCI that the two equities would be deleted from its South Africa index at the end of the month. Now, Africa Rainbow Minerals is one with a market capitalization of 37.5 billion rand. And Growthpoint is the other, valued at 35 billion rand, and they have already seen a jump in trading volumes and share price weakness as foreign investors rush to dispose their holdings. Now, the exclusion from the SA index means that these shares would also have no longer part in the MSCI Emerging Markets Index. Now, any exchange-traded funds or the index funds that track these indices will need to sell down their holdings in these shares by the end of November. At this point, I'm being joined by Owolabi Salako, investment advisory consultant, Afriduwa Partners, South Africa. Owolabi, thank you so much for talking to us.
Welcome. Thank you for having me.
Now, these blue chip companies are considered to be financially sound and have historically they have this sort of attraction, and they've been able to attract foreign investments over the years. So what is the rationale behind having the two equities deleted from the Johannesburg Stock Exchange?
I would like to start by saying that the economic challenges and growth of South African markets been there for a while, and this could be attributed to the sustained low level of investment and growth due to some certain and obvious reasons the country or probably the market have found itself, like dilapidated infrastructure, particularly the power sector in South Africa right now. Quite a lot of load shedding going on in the country that affected level of production, and it has also led to a high cost of production, and this is making a lot of investors to start looking outwards by moving their investments into some other African countries for a good return on investments. And aside that, we can also look at it from the perspective of weak institutions as well, which is not really helping the situation in the country. The government, it's not really, implementing the right policies as it ought to be. But in as much as they are trying their best, to make sure that they mitigate the situations and make sure they set the right trajectory for the country's economy to thrive. But there are still more opportunities. There are still more potential opportunity for growth in the country, and looking at it from that side, I guess there are quite a number of reasons why investors could start looking at pulling their capital out of the market to some other countries on the continent.
Now, Owolabi, for these foreign investors now who are now being forced to sell down their holdings in these two blue chip, that would mean a major economic loss for them in between now and the time they'll be able to find other markets for themselves. But then, would it have any attendant effect on the South African stock market in terms of liquidity and capitalization? Would there be any major shake in the South African markets?
Yeah, I guess it's going to affect the South African stock market because, looking at the amount that is going to be that will be removed from the South African stock indices, it definitely will have a very negative impact on the South African market. And where I'm more concerned is for other bigger stockbrokers and fund index funders not to come and remove the capital out of the market, because that's going to cause a very devastating situation in the market, and it was going to take a lot of effort to be able to stabilize and recapitalize the market. I guess you're very much right that it's going to have a very strong impact on South Africa's stock exchange.
Okay, so to just wrap things up, now the exclusion from the South African index means that shares will also have no longer impact or will not feature on the MSCI Emerging Markets Index. But then when you look at these two stocks, does it signal that they are nearing total collapse? Because, of course, when we begin to have companies like these or stocks like this being affected and being delisted from the stock exchange, that will signal something really, really misnormal. So are we looking at the possibility whereby these major firms will be fizzling out of operation in the next few months or thereabouts? What impact it would have if we continue to notice such a trend in South Africa's business economy?
Yeah, what I would say to that effect is that South Africa is still a potential market for international investors. It's not a market that they will just make up their mind and pull out for the reason that 2 or 3 or 4 major investors are pulling out of the market, because there are still great potentials in South Africa. Obviously, if the trend continue like that, it's not going to be good for the market. But I don't see South African market as bad as major investors that are sustaining the South African market, pulling out that outrightly like that, and leaving the entire economy, the country's economy in comatose. I don't see that happening, because there's still a huge and potential opportunities for the market to revamp itself and and get back on track.
Okay. Before I let you go, Owolabi, just in about 30 seconds, earlier on you talked about government policies not helping the markets and not helping the economy. Maybe just one or two. What policies do you think that the South African government can bring on board to improve the value of its economy, in your own opinion?
I think they need to work on the fiscal policies properly, because there's a need for the government to look into fiscal policies that we encourage investors to be able to pull out their funds in case of repatriating their profit and things like that. And aside that, domestically, there's a need for an improved financial technology services that will bring a kind of inclusion to the populace, so that people living in the rural areas and long distance and areas that are not really recognized could also actually be part of the economic inclusion.
Growth, okay.
So at this point, I think the people in the rural area are not being factored in properly. Okay. And looking at South Africa, trying to take advantage of the green economy, they wouldn't have a choice than to look into how they can factor those people in from a fiscal policy perspective,
Okay.
and from the financial technology perspective, in order to be able to
All right.
reach out to them and
All
bring
right.
them into the system effectively.
Okay. Owolabi Salako, investment advisory consultant, Afriduwa Partners, South Africa. Thank you so much for your time.
You're welcome.
All right. Now, stock market analysts say the forced selling of ARM and JRT shares is a negative development for the South African stock market. It is likely to lead to lower share prices and decreased liquidity for these companies. And this could also have a negative impact on the overall performance of the South African economy, something that we need to watch out for. Thank you so much for watching Business Edge today. Visit our social media platforms at New Central TV. Download our mobile app on App Store and Play Store, and also our websites, www.newcentral.africa, for more juicy information that we have for you on there. My name is Lekan Onabanjo. Enjoy the rest of your day and stay with us when we bring you the news at the top of the hour.